There is a table in the audit that shows the tax, it's the assessment.
Okay, well, good.
Yeah.
We'll get to it then. Sorry.
No, you're fine. Yeah, I don't think there's one that does total tax.
No, it shows the assessment.
But he's looking basically
Yeah,
to add
the
all
chart,
this up.
yeah. We might be able to do that.
Yeah. So with the audit, we had several different adjustments to the June 30, 24 financial numbers as we started, it's not a legitimate pencils down, but there has to be a starting point to an audit. And then once the audit starts, if management identifies adjustments that are needed, your controls should still review those numbers to ensure they're correct until the report's out the door. So it's kind of a rough pencils down, but it's never just stop looking at things. Until the audit's complete, management has a responsibility to ensure the statements are correct. In an ideal situation, in a normal year, if we start the audit in, say, September, and you get an invoice in October, management is still required to go back and accrue it back if it's a legitimate charge back, even if we've started the audit. Those are not reported as findings or weaknesses in controls. Those would be examples of the control structure working. What we end up reporting in here is situations where either the financial statements would have been wrong without our asking of the question or without our proposing of the adjustment. And so anytime we have those adjustments, the standards the standards dictate that we evaluate those of would it or could it have been a material misstatement in the financial statements without the auditor involvement. That's how we wind up to where we are. These are entries that have been posted, have been reflected, and have been agreed to with management. I will say for some of these, and we'll kind of touch on them as we get to them, some of these adjustments are year-end reporting process adjustments. And so when we talk about timing recognition, those would be examples of an activity that was maybe in the wrong fiscal year in your general ledger, but in the wrong fiscal year based on when the goods and services are provided, or the revenue has been earned and eligible for accrual. And so those deal a lot with cutoff, which is, again, a year-end reporting issue. It is important, or it wouldn't be in the reports, but it's more of a point-in-time issue than a daily transactional problem. This first item is a material weakness. We had some significant adjustments to cash, and ultimately, the majority of these are new problems for the city, and it really is driven by the fact that in November, some time frame in there, October, November, we went live with Tyler. Historically, the city has manually tried to maintain pool cash accounts, which has been another item that we'll deal with, where all of these activities, when the general fund cuts the check for another fund, they run it through internal balances and manually try to track ownership of the assets. Now in Tyler, we've set up a new general ledger fund to track the pool cash, because that's what most decent sized governments do these days. Instead of maintaining 15 bank accounts that you have to reconcile, you have all of your assets in one and let the system spread the ownership based on the activity. It relieves a lot of manual processes and a lot of duplicate entries that are needed, and if put in place properly, makes the dispersing and receiving process much simpler. However, what we found this year was the city set up the pool cash account, but the receipts and disbursements weren't always flowing the way that it's intended to function. And so we had deposits going into an account that's not part of the pool and revenue going through the pool. And so there was a mismatch of mainly receipts that were being run through the Fund 110 general fund, but the revenue side flowing through the pool. And so it was creating a headache on the management team on both the reconciliation of the bank statements on a monthly process and pool cash. Ultimately, at the end of the year, showed, as you can see here, that when you ran the pool, it showed the city had negative $8 million cash because all the receipts weren't flowing through the pool. And so it wasn't able to spread those receipts out properly. And so what we had to do, and management helped with this, but again, it wasn't something that was addressed before the audit started. What we had to do is go back and identify all the deposits that were put through incorrectly, journal entry those out and move them into the pool, because the city did not have negative $8 million of cash. We just had the receipts not following the disbursements. So the activity was in the books, but very incorrectly coded. And so that resulted in about $13 million of adjustments to move that activity to the pool, so the pool can be set up and work the appropriate way. And through that, there was also, you can see in kind of these other comments here, the way the reconciliations were being set up, the bank recs were not being what I would call properly reconciled. And so if you think about bank reconciliation, you have to have a known number that you reconcile to. And so generally you take your general ledger, and that's your node. You take your bank balance and you reconcile the outstanding activity to come down to the general ledger balance and agree those two. We had reconciliations going both directions, both reconciliations from unsure why the general ledger is at this number, but we think it should be here, and reconciling down to that number. And so when we had to pull that apart, and that was a massive piece of the delay in the audit this year, is unwinding 8 months of cash transactions that were not, the system was not being used properly. But I think management struggled with trying to figure out how to undo what was happening, and it was kind of more of just, we're gonna keep this Band-Aid on for now, and rather than having the appropriate training up front on how to use the pool cash system. And so the second bullet here is similar, and this is something that historically the city has been doing. However, again, as I mentioned and alluded to in the council meeting, there was a very manual process at year end that kind of undid this accounting. And so when you look at accrued expenditures, when you have an invoice that comes in after year end for services provided, you have to accrue it back. What the city has been doing is reducing cash, even though the check doesn't get cut until August, and putting the expense in the system. And then each year previously, there was an individual in management that would undo all that and move it to accrued liabilities. So cash would be correct, but they were adding layers of work to the process. This year, that person was no longer here. Those cash disbursements were still sitting and being carried on the bank rec as reconciling items. And so we had to do that. We had to undo all that, move it to accrued liabilities, because cash wouldn't reconcile with these disbursements being backdated. And since then, we've kind of talked through it, and obviously I've not looked at 25, so I can't say definitively, but management is working has now implemented a better training on the team of how they need to handle those accruals so that it actually posts as accrued liabilities rather than reduction of cash after that disbursement period. Page 12, still some issues with cash reporting. A lot of this, again, just is a compounding of a lack of what I would say is maybe proper training from the accounting software on how to use the pool cash system. And so there were entries being made manually to the pool cash system, which in an ideal situation, you should never have to make manual entries to the pool. The system does that for you. But when you start making those manual entries, if you don't post them on both sides manually, it becomes out of balance because the system's no longer using system entries to do that. And so we had to work through with management and identify all the manual entries that didn't have matching offsets and reverse those or correct them. Item on page 13, our second and third finding we had this year deals with going back to what I referred to as kind of the cutoff issue. And so with the revenue and receivables, a lot of times 99% of governments live on a cash basis. There's no requirement on a daily basis to maintain accrual accounting. It's kind of an extra level of effort that just doesn't provide enough value for daily management of governments that anyone does that. That being said, you have your year-end accruals that have to be done at year-end to be compliant with GAAP so that you can get your clean opinion that the statements are in accordance with GAAP. This year, as part of the audit process, excuse me, there were a lot of accounts in the revenue receivable reporting period that weren't being reconciled by management. And so they either had last year's balances still in them, or last year's balances with activity on top of it, but not cleaned up from the prior year. And so when we would ask for a subledger that agrees to this balance, the backup didn't agree to the general ledger, and we would work with management to determine, is the general ledger correct or is the subledger correct, and true those up. A lot of this is driven by the fact that in just the transition year, there was not a process in place that someone was reviewing these and reconciling these accounts. A lot of times we could ask the question, we could get the answers we need, but it wasn't happening before we were asking the questions on these. And so the vast majority of these were corrected with management's input. But again, the process isn't in place. This isn't being corrected until July of 25, when the auditors are asking why this balance hasn't changed from last year, or why this number includes last year's number still. Have we not collected it? And we find out the receivable was collected this year, but they didn't relieve the receivable. We just took it in cash and recognized revenue again. And so it's timing issues. I don't want to minimize them because they are important, but the revenue recognition and the expenditure findings that we have on these next two pages, again, are driven by year-end closeout processes that just didn't happen this year. And, you know, to the question, and I forget who asked it in the room, of why some of these are repeat findings, a lot of times with these year-end accruals, what we see is management next year will go back and look at the findings and look specifically at those accounts, and they'll attack those accounts, and they'll forget that there are other accounts that aren't being looked at. So they clear the known ones that we had, and in that same vein, forget about looking at some of the other ones. So one of the things we've talked about is just making sure, and part of the closeout process should be that everything that you have on your balance sheet, you have a subledger for, and you're able to support why this is a valid number. And if you're not doing that process to review and make sure you agree with what's on there, when someone asks, you're gonna have questions. You're gonna be questioned on those numbers. And so it's really just changing the mindset of attacking the problems we had last year to changing it to owning the balance sheet that we're returning in for audit and making sure those accruals are properly stated.
I know, just like you said that you caught that. If the information is shared with the internal auditor here, the internal auditor should catch it. Is that right?
In a very simple world, to answer your question, yes.
Right.
However, it completely depends on how you set up your internal audit department to work, because that is different at every government.
Well, how should it be set up?
That is up to the committee.
I mean, how do you recommend it be set up? I don't know.
So generally speaking, and this is a generalization, which as Tawana and I talked earlier, there's not a abundance of internal audit departments to begin with across the state. It is few and far between. But generally, they are focused at processes, not financial statement reporting. So if you want to put in her plan that she reviews the financial statement reporting, that is up to the audit committee and how you drive the internal audit department.
That'd be a good idea to do that, wouldn't
It's-
Y'all feel free to speak up. I don't know.
I mean, she's focusing on processes, so one of the processes she could focus on is to make sure that these things are being done, not necessarily the accuracy of them necessarily, but to isolate that the process is occurring. I mean, that,
Because that's not happening now.
well, no.
Okay, so we would need to implement that. That would be helpful, correct?
Generally speaking, an audit committee would build an audit plan and a budget. And I don't know if you are doing this, so I apologize if I say something that is in place. But the audit committee should build a plan annually and a budget for your internal audit department. And you should tell them, these are the things we have concerns with, and we want you to report back to us your conclusions based on that. And generally that's a process. So it would be things like, you know, maybe you're concerned with bank reconciliations and you want her to go in and look at bank reconciliations and identify any instances that's not timely or accurately happening on a sample. But you've got to define for her how long, how many items, you know, in a generalized statement. An audit committee builds a plan that says you have, let me make up a number, 2,000 hours of audit work we want you to do, and this is the areas we want you to focus that time in. And these are the things we want you to attack. And they would report back the results of what you ask them to do on an annual basis.
Okay,
And
let
that
me-
changes.
All right, now, I don't know how to do that. Who would have the expertise to come and tell this committee, this is what you should focus on? Who would do that? Would she do it? Tell us that, or would you do it, or,
I think we
Who would
need to
do
hire
it?
someone, I think that's something that we're gonna have to look
cause
at.
I don't know.
And I will say, I would like to add, like during my research throughout the state, the internal audit plans are so, as he said, underdeveloped. We would need, maybe per se a consultant to help us come in and build that audit plan, because right now, I could look at his processes, that are defined and say, this is a material weakness, we need to work on this. But I think to what, Councilman Donnell is saying, like, everything should flow through me, it's kinda like finding a needle in a haystack for me, because it's so massive. There's no way for me to like filter everything, but I can look at what they're doing, to ensure that their practices will, produce a favorable outcome. But to monitor every transaction wouldn't be feasible, especially for a one-person
We
operation.
can't monitor every transaction, we don't. I mean,
Yeah.
it's,
So,
I
it's a
can-
process.
I can handle that. What I'd like for you to do is put your attention on those, findings that we had, so that they won't recur. You ain't gotta look at everything, just the ones that he said we messing up on that. Make sure that they don't recur for the next year.
So we would work together, or Nathan would develop a plan of corrective action, and it will be very specified to say who's responsible for this responsibility and what we're gonna do to cure it. As my role, I will go in to ensure that the plan he put in place is being, carried out and transacted. So he would need to create a very specified plan. So if those reconciliations are not being done, accountant one is to do reconciliations, on the 30th or the second business day following the end of the month. Then I will come in to spot check and make sure that accountant one is actually doing that function.
Is there also an amount set aside for the accruals? I mean, like a dollar amount that we have monthly, instead of doing it at the end of the year, is there an amount monthly that we have to adjust those accruals?
You don't typically, most governments don't adjust them on a monthly basis, and so it'll carry over to the
Because
next.
you know you're gonna have them. I mean, obviously, we're gonna have them, so we need a
But-
lot of money to.
well, there's a certain amount of activity that goes through some of these accounts month by month anyway.
Right.
But then you look at that amount at the end of the year and determine whatever expenses or revenue that you're looking at, what is available and measurable. And it more has to do with the succeeding periods than it does throughout the years. Because, I mean, I wouldn't want to accrue months in this fiscal year, because I'm fixing to record them anyway when they come in. And so it generally is one of those things you would do at the end. You would reverse the previous year, true it up to whatever you actually received in the subsequent months. And then hopefully, since it's measurable, you can actually use the right numbers, but put those in as part of the year-end accrual.
Are you talking about basically checking it month to month?
Right.
Yeah.
At least
To
reducing
see
it or
where-
having.
Well,
having
the
some
thing is, for
level
most of those
coverage.
accruals, most of those accounts that have accruals, there's activity in those accounts anyway, except for things like payroll and some of those things. There's activity in those accounts anyways, these expense accounts and different things. And so there's activity every month, and it is correct because it's what we're actually doing. But then toward the end of the fiscal year, on June 30th, some of these things we have to estimate what's coming. And most of those numbers, some of them aren't knowable until September 30th. I mean, depending on when we prepare. And
But that sounds like that's when most of them are getting adjusted at the end of the year.
They should be, that's when they should be adjusted. Or typically, that's when they're done.
But monthly, we wouldn't have as many at the end of the year.
The thing is, again, monthly, I'm getting actual numbers. I'm getting the real numbers. I'm not trying to predict something.
Right.
Because those are actual numbers.
Yeah.
The year-end accrual process, I'm taking the numbers that I got in July or August or whatever, and then back those into the previous fiscal year.
I will say what you're asking seems very logical, is very uncommon in a government because of how much activity and how much time is available in a day to do that. And so most governments of any size don't reconcile their accruals on a monthly basis in the government world. Now, that doesn't say you can't require that, but there is gonna be just an additional level of time and effort on staff resources that you have to evaluate. And again, just frankly, most governments live on a cash basis, don't do the accruals until the end of the year.
Is there any type of quarterly reporting that you see done, or is it usually just annually?
Most of the accrual basis reporting is only done annually for the financial statements, and everything else is maybe in a single fund proprietary. If you have a water district, you know, they've got a much more finite set of transactions. They might do accrual basis, but even then, most of them still are on a cash basis, and then they do the accrual true ups at the end of the year. But those are all discussions for the city to have, and just be aware of that is just, if you do want them happening on a monthly basis, my recommendation is to first get the annual put in line and then try to go back from there, but that would be atypical, I guess is the best way to say it. Going to page 15, dealing with internal balances, I won't spend a ton of time on here, other than to say, you know, as I mentioned with the new implementation of pool cash, historically, the city has just maintained cash in one general ledger account. And when the general fund would issue a check or take in receipts for someone else, they would use due to, due from accounts to track who owned the assets without ever actually moving cash to the respective funds that had it. So they would get an asset, their books would be correct, but they didn't report cash, they reported a receivable from the general fund. We shouldn't be using that anymore, and I don't think after we've implemented, there was some wave of time where it was still happening to kind of get going into 24, but it shouldn't really be used anymore. But now we're sitting with these balances that historically have been used to show ownership of cash that need to be cleaned out and eliminated, because inter-fund balances really are no longer needed in a pool cash environment. So when everyone shares a pot of the pool, you should know at every point in time whose cash is where, rather than a mixed match of.
Yeah, we're taking care of this now.
Excuse me.
That's what you do. Typically, interfund balances are cleared at the end of the year anyway.
Yes.
You never see those. Although I've gotten some in the past and other things, but.
And so those should be fairly easy to clean up. That the interfund balances, and then historically the city has used kind of the ownership of the LGIP investments to show who owned the assets. So the funds showed it. It's just a matter of getting the accounting to match now that we no longer need that very manual process, and we're moving to a systematic way of tracking.
Why is solid waste fund always an issue?
In what regard?
Are we accounting for the solid waste fund to the best of the city's ability?
Just a couple of things. Solid waste is separate. It's a business like,
Which
yes.
we can wait, but that's something.
Yes. Now there are some other things. It's like there are some other things in there. It's like one of the things, James, I'm looking at is like write-offs. They've got they're carrying it receivable. They didn't write anything off in years. I mean, but which is fine. But at some point, it's
Well, there's positive and negatives to both way you look at that. So
yeah. Well, I mean, some of this is uncollectible. I mean, it's just gone.
Yeah.
You know, there are several things there's not a huge problem in H&S. There are some things that have just been plodding along for years that we're going to try to tighten up and clean up.
Okay.
If that,
Yeah, it's just something that we've always, since we started, that there was an issue, so we have to get that cleaned up. Thank you.
Yes, sir. Thank you.
This next page, the timekeeping discrepancy, this is one that hopefully it's not a surprise to this group, but the comptroller's office shared this information. We required under those standards, anytime there's been a abuse of, I don't wanna call it theft, but essentially an abuse of the system, greater than $100, we have to include it in the report. And so this item dealt with an employee who was abusing the time management system and was being paid about ultimately close to $30,000 of payroll, wages, and benefits for falsely reported time.
This is one person.
One person was dealt with, and there were charges, there was restitution.
Yeah.
Okay.
And it's, you can see the time
Long
periods, 2019 to 2022, again,
Right.
just the way that our contract with the state works is anytime this is reported, it's in excess of $100, which I feel like is a very small number, but none of the matter, we have to include it in the report, so it's been included in there, and this is something that has been resolved.
Did we not have a system in place that should have caught that? I mean, is it someone responsible here?
I do not know what timekeeping system we used in 2019. Does anybody?
Paper.
Paper.
Well, and this was an instance where that employee was in an office location by themselves and was not showing up. So, I think the changes now are they have periodic
They're
check-ins.
supposed to use time.
Tyler.
So we had no system to catch that then?
Well,
Except audit.
I mean,
Well,
Well,
we didn't catch it.
we caught it, we caught
The
it,
city
we
caught
reported it.
Yeah.
Okay.
I mean, it just happened once they began investigating that they realized that there was quite a bit to it. And in the email I sent you guys, we are constantly, and Ron will nod along with this, we are constantly looking at ways to just assure ourselves that timekeeping is operating in the best way that it can. Is that an accurate way to say
Yes.
that? Yeah, he's smirking slightly, but yes. It's
Yeah.
like,
You'd have to explain this.
yeah, I mean, it's a conversation.
Yeah.
And so, anyway.
The next two items deal with our single audit report, and so this page 17 comment is a repeat from the prior year, and probably will also be a repeat in 25 if this program, well, I guess we'll have to audit this program as well. But basically, the way that your quarterly reporting to U.S. Treasury was working is you're required to fill out those reports based on actual expenditures, and previous management was filling them out based on purchase orders were put in, but there were actual disbursements that we were making that were not going through the purchase order system, so they were not being captured in the report. And so the process has changed. However, when we found this in 23's audit, 24 reports were already done and submitted, and I think some of the 25 reports were as well. And so it's repeat by default. Maybe the error, if you want to say it that way. the
We may
error
be
was
true
not
up as of
identified.
June 30th, 2025.
Yes.
We may be.
Okay.
This is our ARPA funds.
It is.
Yeah.
And this is in here because the reports are not accurate, but we've seen this, not the same situation, but these reports unfortunately have accuracy problems at other places. And Treasury's stance is as long as you true it up by your final report, that's all we
Right.
want. And so it's not a huge deal, but I can't say it worked, like for our opinion, I can't say it worked properly because the numbers were wrong. But ultimately, the only consequence is just make sure your last report's fine. And that's what Treasury has told everybody in this situation.
When do we have that last report?
It'll be due January 31st, 2027. Unless they give us some extension, which I hope they do, because that last one's gonna be a doozy. But anyway.
And page 18 is very similar. It's just, there were, for our purposes of testing allowable activities and allowable processes for the program, one of the things we have to test and opine on is internal controls. There were 3 instances that did not have documentation of being approved. It's 3 instances doesn't seem like a lot, but 3 instances exceeds the amount that we can say is just isolated incidents. And so the activity was compliant, the controls broke down because the support for the approval couldn't be obtained. And I don't know, I can't say if it was just approved and the documentation was lost, or if it slipped through and got approved without having it actually stamped and approved. But just one of the items we have to note is any instances in internal control where there was a breakdown, and the guidance kind of tells us the acceptable error rate is 2 in that instance.
And do we know what that was and where it went to?
I don't know the three examples he's talking about. What I suspect is, unless you know them right off, I suspect either it was something the council approved and a purchase order was not issued, there's a failure control there. It was something that didn't require a purchase order, and maybe it wasn't signed off on by a responsible supervisor. It was something in the breakdown of the approval process. Now, I mean,
Should we not know what that is and make sure that that's
It
been
cannot happen
corrected
now.
and that person or,
I will make sure he has those
Funds.
3 instances, but Tyler will help reduce that.
yeah, it can't
I
happen. It
understand
can't,
that.
yeah.
I just think it would be good that he knew exactly what it was.
Yeah, I don't know if they were large dollars. Is there a materiality concern there? Does it have to be material or just, does it matter?
Not for control testing.
Okay,
There's
then,
no-
I mean, it could have been $200 or $200,000.
Right, right, yeah.
Don't, where'd Brandon go? Don't quote me on that.
No, he's
Okay.
going out there to, right.
Okay.
So on page 19, these are what we just call management comments, where they're not raised to the level of what's considered to be a finding in the report. Or they're items that we communicate to management where we notice room for improvement, or items that they need to consider kind of going forward. There's a few of these that I do want to kind of touch on, just for you all, but certainly if I skip something that you're interested in, we can go back. But on page 20, these 2 items are ones that I think are of relevance. So internal control environment, what I perceive to be one of the big challenges management had this year is with turnover of people. There was processes that were in place, but were not written policy. There were practices, and when those people left with that skill set, the new people in place didn't have a document to pick up and a policy to follow. And it was more obvious in this year when that process was not happening. And so, one of the items we've kind of cited here is just making sure management goes through and revisits their policies and procedures and make sure that we've got them up to date for what's actually happening and not what it was maybe 5 years ago in an old system that we were using. So that'll just help anytime there's turnover in the accounting department, so that everyone knows whose job responsibilities include what items. And then the second item on this page, we've kind of talked about before. Hopefully now with Tyler, we have kind of a built-in block for this.
These are gonna be much smaller numbers next year.
And hopefully we get to where there's none. But there were still over expenditures this year in the various funds, as you can see here. And that has been historically driven by the autonomy, which is good, that the departments have to go create their purchases and request items. But because there's no system block on, they're responsible for ensuring they have budget funds available. That was not happening, and there was not a checks and balance to prevent them from spending over what their allotments were each period. And there may be need times where that's needed. It just requires budget, presentation for amended budgets to the council, so that those get captured and approved ahead of time. As it is, several departments, several funds were very significantly overextended this year, which also creates some of the challenge we have on the fund balance graph, if you think back to that earlier presentation.
Number 800,000, it's not that bad of an estimate.
Wasn't
that far off, okay.
The last item on here, I'll take it back. I'll have 2 more items. So page 22, conflict of interest. This has come up a couple of years in a row now with different kind of letters and allegations that we get from the comptroller's office. And just to ensure that we have a policy and we have a process to ensure that council members are disclosing any potential conflict of interest that they may have with various parties. So generally what should happen is have a policy in place where you all, as a city, require all the council members at the beginning of each year to list out any related parties that they may be a part to, and then have maybe internal audit obtain those and make sure that we have all of those documents, so that at any point in time, if there's a resolution or anything being presented before the council and someone needs to abstain, that we just avoid that maybe negative image that may portray to the community if we've got someone on a contract or something they may be related to. And so,
Would that example be, so it, like here it's saying for nonprofits, is that right?
Mhm.
And so if a council member is serving on a nonprofit, that the city is deciding to give money towards, then that person should disclose that and abstain from that vote. Is that practically what we're dealing with here?
There's a couple of things there. First of all, if you disclose your interest and you are not an employee of the nonprofit or something, I think you could still vote as long as you disclosed your interest.
As a board member,
That would
not
be,
an employee.
that's right, that would be a choice that you would make.
Okay.
But certainly, if you have a commercial interest in a for-profit or nonprofit, then you should not vote to give them any money.
Right. Yeah.
I mean, just to be blunt about it, yeah. And so, I mean, that's the,
Well, keep in mind too, that generally only happens in the budget, so that would be, the budget vote every year.
well, I think some transparency
Or a
though,
question amendment, maybe.
even just some transparency in those conversations, you know, I mean, you'd hate to not vote on the whole budget simply because you were commercially interested in $2,000 line somewhere.
In the law is you stand up and make a proclamation that you are involved, but it will not affect your vote, you can vote.
It depends, and we have to look at that. I don't remember, I do know that I've been, you can actually make a declaration that says I have personal interest in this, but it's not influencing the way that I vote in this. But the point of this, I think, is more that we should disclose these things, not necessarily how you should handle it in the moment, but that they're, and apparently it's just come up before, that our council especially should be exceedingly forthright with their associations with other nonprofits and other organizations. They should be just right out in front with you.
And a lot of places do that. They maintain an annual disclosure that every year, every member of council has to sign a page and list out every entity they're related to, whether it's ownership, service, employment, and then that just gives the city management team the ability to ensure that if something is being presented as an amendment or anything along those lines, that we remind that council member that they should disclose, abstain, whatever the situation may be in that situation.
Thanks.
And then the last item on here that I was going to touch on is we've kind of already talked about it, but just to make sure it's explicit. The city does maintain a minimum fund balance policy, and as of June 30, 2024, we are below that number. 2025 appears like it will continue to go down below that number, and so making sure we've got kind of an action plan or a decision. Do we decide? Does our policy need to be revised, or does our course of action need to be revised? With
Go
that,
back 2 years and change some decisions, we will.
I'm sorry.
Can we amend the FY24 budget?
Very often those policies are just written to say that we will put course of action to get us back. It doesn't mean immediately effective, so. The last item on here, just to kind of point out, GASB 101 is something that will be effective in this next fiscal year for June 30, 2025. It changes, so historically you've always included compensated absence in your financial statements. Historically that definition was very narrow, and GASB has determined that there are lots of governments that have more than just accrued vacation time that they will provide to employees, and so they're broadening the bucket now, and essentially now what will be captured in this liability is any future benefit to an employee that is accumulated and carried over more than 1 year. And so that'll include sick time, which has never really been part of that conversation. It'll include any kind of comp time or terminal benefits, anything that you have that you allow employees to accrue and carry, historically has not been required to be included in your numbers. What we're seeing on these people who are implementing them now with the June 30, 25s is it's increasing that liability.
Sure.
That would be quite sizable, right?
It's going to be a big number.
Right.
We've talked about this.
Okay.
James and I talked about it yesterday. So I was giving you the stink eye. This is going to be a big number.
Big, like 1 million, 2 million, 3 million.
$750,000 to $1.5 million. That's just my.
The good news is it's intended to bring accountability for the fact that you have promised employees these benefits. It changes nothing in the way that they're actually carried out. So the liability will show up, but it doesn't mean you're going to cash flow it next year. And there's no requirement to fund it. It's just acknowledging that we have employees who have earned X amount of hours, and it's going to cost us X amount of dollars in the future when they leave employment.
And the GFOA invented that incredibly comprehensible spreadsheet.
Yes. And so they've got a very robust spreadsheet to help with this new accounting
I
system.
was thinking like,
I'm gonna skip a couple of items here. I'll go last 2 points, page 27. I know management is aware, hopefully all of management is aware, but also all members of governance are open to this. One of the things we do for all of our clients is we provide quarterly continuing education virtual classes that are 8 hours of CPE credit in training and accounting-based topics. And we also send out newsletters based on kind of what the relevant topics are that are maybe new accounting standards changing or new guidelines that may be changing. If you, as a member of the audit committee, are interested in receiving those, if you can let me know. It's just an email letter that we send out and has the registration information and the newsletters included in the email. So you can, my email is in here on page 28, or you can just send Nathan your contact information and I'll get you signed up. And again, it's no harm, no foul. If you sign up and you don't like anything, you just delete the email over time. The last item I don't tend to spend a ton of time on, but just based on some of the conversation from earlier, one of the things I always want to make available and known is we have an entire advisory team at Audit Jenkins that works solely with local governments. And you can see here kind of some of the things they do are operational assessments and strategy approaches. You mentioned potentially needing a consultant for the audit committee and where they go. I'm on our assurance side, so I'm not going to say that's me. That's not my sandbox to play in. But we have advisory team members who have internal audit background, have served on internal audit departments, and certainly they work with governments in outsourcing that role. We can, in some capacity, outsource to supplement and help with the team, but because we're external auditors, we can't do anything that involves writing policies, procedures, putting controls in place, but we can help build game plans. So, if you go the route of looking to get quotes and information on that, certainly just know Malden Jenkins, we want to be a one-stop shop for any of our clients, and anything we can do to help that we can do and maintain our independence, which is our first and foremost concern. Please let us know, and I can certainly connect you with those folks. But that's all I have as far as the presentation. Certainly, if there are any specific questions or anything I've not addressed that you'd like to talk about, I also have the statements are loaded up here. There's a specific item you wanted to see in there.
I have a question. Was it just an omission, or is JTA back to page 3 not considered a component unit?
They are, but we're their auditors, so we don't have to get their
Okay,
we don't have to get their separate auditor letter.
Okay, gotcha.
Any other questions?
Can you explain the huge swing in unrestricted net position?
Unrestricted net position.
Mm-hmm. We went from 23,700,000 some change to a negative 611.
page you on?
I'm running out of my kind of compiled spreadsheet.
Oh.
That would be.
I'd have to look at year over year, but you can, if you kind of see the bottom of this page. I'm sorry, this is in the financial statement, so it's not the presentation I just went through. These are all of our long-term liabilities. 15.
You're scrolling slow.
The total OPEB liability, our compensated absence, and the net pension liabilities, these are our employee benefit costs. And as they increase over time, they eat into your net position. And so they're not related to capital assets. Capital assets and related debt is that first number. Having these liabilities, which are not 100% funded, state of Tennessee plans are not 100% funded. So as these liabilities continue to increase because of the cost of retirement increasing, they will continue to eat into unrestricted net position. The lease payables, the finance purchases, the bonds, all of those have offsetting assets associated with them, so they're not diving into that number. Also, as we continue to eat down into fund balance, it's going to create.
Oh, if you remember, this was sort of the same conversation we had with JTA. When we, I mean, it ended up being part of that, and I'm sorry I didn't think about that when you asked me that, or when you and I were talking about it the other day. And actually, Ron and I have been talking some about some of these pension, and how it will affect net position. I mean, that's honestly one of the conversations we've had. So
You can see here, just fund balance, which is gonna drive net position, is down ultimately 10, almost $11 million. So as that goes down, that position goes down as well.
Was this a GASB change that occurred on reporting this in the last couple of years?
yes, so the way that you report those pension liabilities changed.
Pension liabilities changed probably 9 years ago.
Yeah.
Oh, okay.
OPEB changed 5 years ago,
Yes.
which OPEB is generally the worst
Yeah.
because it's the least funded.
Right.
And you saw, and that is responsive to the market as well in some cases. I mean, so, I mean, what are the assets worth to some extent? I mean, but
Well, employees.
yeah.
Thank you.
Any other questions for Mr. Benz?
I will tell you, in order to do this in a timely way, and to eliminate as many of these things as we can for FY25, we will probably be reaching out to some local folks to help us tackle some of these things. Some of these folks James knows, and they can, not sacrificing your independence, but you can say, you need to focus on this, but just in order to get that done in a timely manner. I know you guys, I know we have budget constraints, and so as far as human resources, everybody always wants more, right? Okay, but just short term, I think the quickest solution to some of this to get ready for FY25 and then even better FY26 is to bring in a little help. And so just council members, you can look for that expense. I think I've still got enough cushion in some of my payroll.
You had a padded budget, go ahead.
If I had hired all the people I wish I had right now, I would not. Okay, but we've still got some cushion in there, padded, and should be able to offset some of that cost if we do that. So
That was something that we were gonna recommend. I think we've kind of talked a little bit. It could come from the audit committee too, as a recommendation.
that would be
Short term and long term.
that would be helpful. And I mean, okay, I am prideful, not overly so. I don't want to need help. But then, James and I were talking yesterday, and it's like I realize sometimes that it's like you got to figure out what fire you want to put out, and that's.
Well, I think we owe it to the citizens. We do have to really cut back. We know that. We have to look at our budget, but we owe it to the citizens to start with a clean picture. We've been saying this for several years. So.
I was at a meeting the other day, and they reminded me that. Was it you, Paul? It says that you reminded me that we're a non-revenue producing office.
That was Jack.
That was Jack. Sorry, Jack Mathers. Like I'm like, okay, I appreciate that. I feel good. But
you're protectional. I mean, you're a fiscal
right.
accountability office, and that's what I think we need to make sure you're funded. Be able to, you've got the appropriate staff to be able to handle what's asked of you.
And Ross said that we'll make comments to our chairman and then get back together, but
yeah.
I think that's a really good starting point, maybe a consultant and how you have people to get this done.
I'll start talking with them and seeing. I'll try to get a sit down.
Short term and long term.
Long term, I'm going to be able to do it. Long term, I want this to be something but we got to make quick progress, and so,
I Mr. Reed and Mr. Benz, thank you for your time and presentations. And I assume that we have any questions in the months ahead as we're continuing to work on this, we can reach out to you. We appreciate your availability there. So,
Thank you.
all right, with that, motion to adjourn.
Oh, can we at least touch new business?
We're gonna have anything
Okay,
listed.
I just wanted to just say what we just said under new business, to be sure that if you tell, just send the notes to her
Okay,
with ideas of what we wanna bring up in December.
sure. Yeah, just a reminder, so our December meeting will, please, as soon as possible, send, things you want on the agenda, things you want to discuss to Chairman Robinson. She'll put that together, and that'll be, our time to kind of work through this. And as a reminder, as our role as the audit committee is to ensure that management is getting these things done, or hearing from you guys how we're gonna tackle these and, move forward. Is that?
Yes, sir.
Yeah.
Thank you.
Do I have a motion to adjourn?
Richard's not here, so I'll do it. So moved, so moved.
All right, meeting adjourned. Thanks.
Thank you, good job.
Everyone.